Hey everyone, it's Ali Coram here. Now, the IBD Live audience heard from hedge fund manager Jim Ropel on Wednesday, whose message was be bullish, but be prudent. Here are some highlights.
I have to give you the caveat before I give you the great bull case. This is not a lock. It's a fledgling, emerging bull market rally. But if you're not bullish right now, you should probably get out of the business. Again, this could roll over. So you have to identify your risk. But I think if you're getting involved now, you're probably risking 1 to 3% of your whole account to make 150, 300%, depending on how aggressive you want to be. But this is a moment. And this is what I live for. And this is what everybody following O'Neill's should be paying attention to. This is it, man. I'm ready to go. Initially, I was still focusing on the internals and I was not watching the price. I mean, I was watching the price very carefully, but I wasn't believing it. You have to remember, it was only like 3 weeks ago that ON blew up, AXON blow up. I was saying at that point, it would be unreasonable to stay long during earnings. It was a minefield 3 weeks ago. So this turn, I remind all my subscribers, look, we're 3 days away from a major turn at any time in either direction. Yeah. But now you have to go with price. The market's broadened out. There's a ton of leadership and a lot of amazing tight action. This tight action is what's really got me fired up. I mean, my last report was called Digestion Watch. How these emerging names, these new names have come out and they're exploding up and they're holding dead tight. How they resolve these stubby little digestions is going to be everything we need to know. And I've seen this before. I've been doing this since 1985. When I see this, it's hard for me to sleep because I know what comes next. I mean, let me slow down. I know what can come next, and don't get super bulled up and FOMO in because
without a plan.
One bad day, if you're buying extended, you're going to get wiped out of everything. So as much as I'm really revved up, I'm doing everything I can to judiciously put money to work so that I won't get whipped out or I won't get whipped out of too much. But this is so early. The 150-day moving percentage of stocks over the 150-day moving average went down last week. So if this is real, we are so early. It's not even first batter. It's the batters crawling out of the dugout to go to we're so early. The small caps are just emerging. Look at NASDAQ, 6 weeks in a row, working on 7 up. This is power. If Bill was here, he'd be like, you better be buying something. You have to have some inventory on, or he's going to tap you on the shoulder and pound you. There's always a bull case and a bear case. Simple story. There's a old-time money manager and he's been bruised by the market and he has a rookie come in and he says, hey, write me a report on XYZ. And the kid says, do you want a bearish or bullish report? You have to find the fundamentals that corroborate the trend. If I told you guys today, I know when the recession is going to start, I know when it's going to end, I know when rates are going to go down and how far. None of it matters because I've seen markets bottom in the middle of recessions, near the end, and even earlier. I've seen markets rally before the Fed cuts, discounting the future. And I've seen the market wait for 2 or 3 cuts before it goes. So the only thing I can use somewhat reliably is the price action of the indexes and the leading stocks of the day. Okay, we just ground out 27 months of a bear, depending on whether you look at the high of the NASDAQ, the high of the small caps, or the high of the relative strength line. This is what we've been waiting for. I mean, just to put it in perspective, Ascend Communications in 1994 went up 3,936% in 98 weeks. That is a absolute 98 weeks, 94.7 weeks, 95.31 weeks is the average duration of a TML. The longest in history was Waste Management. It went up 222 weeks in 1976, 1,011%. Okay, people are going to sell these names up 20%. At the beginning, possibly of a new bull, the end of a bear, and these things are going to go to could go to Mars. Again, I'm bulled up, but I'm 50% long. I am not FOMOing in here. When I was a rookie broker back in 87, my boss was at that point, he was 80. And he's like, yeah, you know, General Motors, Generous Motors, as General Motors goes the whole market. Well, you can just substitute NVIDIA. Okay, as NVIDIA goes, so will the whole market. If we undercut these lows of the gap up day, and it closes below, and the way if it breaks it, how it breaks it, if it breaks it like Wingstop, I'll be chill. But if it violently breaks it, this rally could be in jeopardy. There are moments when the market will support aggression, and there are moments where it will end your career. Risk management always remains job one, but you have got to understand these cues the market is giving us here. There's probably a lot of people out there going, bear market mentality. I'm worried, my stock's up 15, 20%. I'm going to take it. I did a study from 1965 to around 2000, I don't know, whatever it was, 288 stocks. The average percent gain was 817% for the whole run. And now people are going, oh, the market's rolled over this morning. Who cares? If you can't sit, the shortest stock in my whole study was 32 weeks. Okay. It was National Video in 1965. It went up 362%. The average person in America holds a stock for like 12 days. How possibly can you catch 5 beat and raise quarters if you're holding stock for 12 days? So there's going to be ebbs and flows in this rally. If you look in the 2020 COVID explosion rally, every time there was a new strain of C19, the market rattled really hard. That is going to happen if this rally is real. I guarantee you, we're going to have many, many pullbacks. So don't get too myopic here. If you want to get seriously rich, you need to sit. As bulled up as I am, this could fail. A number of stocks that went below the 150-day MA went up last week. More stocks are acting weak, but this is the type of action that exactly what I'm looking for. We're seeing now rotation. Don't be a rookie. Try to do everything you can to let your leaders succeed. Don't suffocate them. Think 4 to 5 beat and raise quarters and a killing. I want you to get rich. You're risking 2-3% of your money to make 50, 100+%. The AI and Palantir invested so much in R&D. That's innovation in America. The golden goose is alive and well, and he's going to flap his wings and blow a blizzard of money all over us if this thing broadens out. So, America rocks, and we have the greatest mousetrap in the world, and it allows everybody. Guys living in cardboard boxes downtown Chicago could get their shit together and become billionaires in America. That's not a possibility in other countries. Anybody can buy stock. Anybody. I started with like 400. I was trading options with $300 in college. Okay. Anybody can do this.
Now, given that some of these elite stocks sold off in heavy volume on Wednesday, Jim said in a video with his GrowthStockMentor.com subscribers that now he's looking to see how these stocks absorb the selling. In their declines, did they break below recent tight areas? And if so, did the volume come heavier than on the upside? Those are some clues that he's looking for, or to see if volume was lighter than those big upside moves. And he also made sure to remind his audience that the shorter the base, the higher the risk. But if Thursday's trade was any indication, it seems like for the most part, so far so good. So we'll have to see how this continues to play out. Well, if you enjoyed this video, make sure you subscribe to my channel for more just like this, where I speak with some of the top minds in the world of trading. Thanks so much, and see you next time.